You're listening to the Veterinary Innovation Podcast.
You're listening to the Veterinary Innovation Podcast. My name is Sean Wilkie, and along with my awesome co host, we interview the innovators in this space every week. Ivan, please kick us off.
Hey, I'm Ivan Zach, and I'm excited to introduce Chuck Rich. Chuck is the director and co lead of the healthcare property team at Greysteel, specializing in veterinary and single and multi tenant investment sales. Since entering brokerage, he and his business partner have successfully transacted over 150 million in commercial real estate. His real estate career started in Philadelphia while still in college working for a multifamily developer. Over the next 16 years, he wore every hat there is from acquisitions to project management to securing debt and equity financing. Chuck, welcome to the podcast. Thank you for finding the time.
Yeah, thanks. Appreciate it.
So this is it's always a hot topic how the real estate goes with the acquisition. The consolidation is rampant in our industry. It has slowed down. So can you tell us if you've seen a significant slowdown in the corporate acquisitions, or do you see more activity from vet to vet? And in your sort of segment of the business, because I know that in the last year and a half, well, most of consolidators fired and laid off their business development team. So, do you see that as an impact to your business?
I do to an extent. So when we work with clients, we work with both independent vets who still own their practice and those who have already sold to either the corporate operators or to other partners. I agree. There has been a slowdown in the corporate purchases. Although, we speaking to vet owners on a daily basis, and you always come across at least a few during the day that have said, I just recently sold to NVA or to veterinary practice partners, whoever it is. But, the flip side of that is, I also speak with independent owners who don't necessarily want to sell to a corporate operation. They'd rather sell to a younger vet, who they mentor. If they can navigate that, I think that's a preferred method for sure.
So, for the most part, do you see vets selling with the sale or keeping the real estate? Is that what's the most common? Because when I was doing a lot of M&A activity, then it seemed like that's a retirement plan for a lot of people to keep that and to kind of draw income then from the real estate that they acquired or build the hospital together. Is that the common situation now, or you are the guy who is unlocking this opportunity to kind of sell it and make more sense out of it as the item that they sell with the business?
Yeah, so we speak with clients. A lot of them do say, "Well, my plan is to, sell the practice and the real estate together." And we believe, not only because we're in real estate and we have a vested interest in it, but we think the vet will, have higher proceeds if they sell the business separate from the real estate. I do come across a lot of vets who have already sold their practice to, the corporate consolidators, and like you said, they held their real estate. They use it, as part of their retirement plan, and so they enjoy the cash flow that comes from it. And then when I speak with them, I discuss whether that makes the most sense just to continue, collecting the rent, or maybe depending on where they are in the lease term, if they're getting towards the end, there's always the chance the tenant doesn't renew. Less of a chance for sure in the veterinary industry, but maybe the proceeds from a sale can be used for a different investment, some other alternative. And the other part of kind of what to do with the money question, a lot of the older vets we talk to who have retired and but are still collecting the rent. The vet building is part of their estate planning. They're just going to leave it to their heirs. Sometimes that's not the best asset to accomplish that. So maybe a sale into a different type of real estate, or just to cash out and fund some other investment.
Yeah, Chuck, when we were speaking kind of before the podcast, we were talking about like innovation and what is it that you guys are seeing or doing that you would consider innovative. And you were telling us about a real interesting concept where, people that are still in practice are kind of letting their real estate go through another investment. I can't remember the exact name of it, but I thought that was a really interesting concept for somebody that's out there and for people that are out there that are thinking, maybe retirement's coming within 5 years, and then, being able to reduce the capital gains by splitting apart the business and the asset. Could you tell our audience a little bit about that? And I think you even had a name for it.
Yeah, it's a sale leaseback. So the easy way to think of a sale leaseback is the vet practice owner will sell their real estate, and simultaneously at closing will enter into a long-term lease with the buyer. So the buyer becomes their landlord. This concept, it's been around, but definitely more recently in healthcare type businesses, and especially vets, we're seeing it more and more because they might not be ready to sell their practice because they haven't set up their succession plan yet. They either haven't picked the corporate operator they want to sell to, or they haven't, the junior vet hasn't matured enough yet, and isn't quite ready to buy. So the sale leaseback allows them to sell the real estate, thereby taking their equity out of the building, and they also at that time, because of the long term lease, they're setting up security for the practice. The typical sale leaseback terms, would be a 10-year lease, sometimes 15. Yeah, really, the longer the better. And so that provides the practice, whether it's still with that same owner or it gets sold to another owner, with security in that property for that 10 years and more with renewals. The other side of the sale leaseback, it's not just being used by owners who are cashing out, or who are setting up their retirement. It's also used by vets who are looking to expand, so they can unlock the equity that's in their real estate and use it to maybe purchase another clinic, purchase another property, expand the property they're in, or some other investment in their clinic, and maybe that's bringing in new vets, whatever it is, to ultimately set their practice up for a higher sales value.
So that's a really cool idea. So essentially, if I'm build a practice with the building, or acquire the building and build a practice, and then I'm not ready to sell the business to corporate, I don't want to, and other things, but I'm going through midlife crisis and I need that convertible and celebrate a little bit of midlife crisis. So I
Don't take
can
your investment advice from our podcast.
so, so that's the vehicle how you can liquidate that asset and then potentially reinvest it into something else other than convertible. So what do you think? Like I think that I had to make this decision whether to step into building ownership. We're building hospitals in Atlantic Canada, and we decided just to scale the operational business and just continue with the lease because in our case we're expanding rapidly and locking the capital into real estate just doesn't make sense because we flip like build the operational businesses much faster. And so for someone who owns the building and wants to start that discussion, can you help me understand what are the benefits of unlocking that capital and what is the better investment of taking that and reinvesting into something else? Because if you're reinvesting it into another real estate, is there a better real estate than the one that is under a long-term tenant like veterinary clinic? Or what are the better vehicles than you help them to repurpose this equity into?
And then
Yeah,
just let's ask you 16 questions at the same time. I got three that I want to add as well. What about, is there specific buyers that do this type of sales leaseback in the veterinary space or healthcare at large? And we'll stop there. Just you'll probably lose track of the questions.
yeah. So what is that better investment? I'll first start by saying veterinary as a product type is very strong, and it's gotten stronger, over the last, let's say, 4 to 5 years. COVID, we'll use as the big, explosion of pet ownership and spending on pets. Since 2020, there's been about $1.3 billion in total veterinary real estate sales. That is a 95% increase over the preceding 4 years. So between 2016 and through 2019, it was about 675 million. And then just between 2020 and through 2024, it was 1.3 billion. The average property also increased in price from a million to a million four. So 40% increase in value there. But in terms of the sale leaseback and kind of what does the client do with the money next, and whether they have a plan to for expansion, to buy another location to expand their brand, or some they want to bring in again other vets, other technology. That's a big use, is bringing in some new service to the clinic, which is very cost prohibitive, whether it's oncology related or rehab related, that could be a use for the money. We also see, if it's a larger practice with differing ages of DVMs, there could be one partner who's retiring, and they could use the proceeds from the sale to buy out one of their partners. But let's to kind of answer your question as to what is that better investment if it's not reinvesting in the practice. So again, vet as a product type is strong, but there are other net lease real estate types which could be stronger as a piece of your portfolio. Maybe it's something that has credit strength behind it, whether it's a publicly traded company or some other product type, fast food in a really popular location, whatever. There could be another real estate type. Also, the vet is going to have some form of landlord responsibilities on their property, and selling and buying and kind of trading into a different property that has zero landlord responsibilities is also something that is very popular, and what they look for. To answer the question as to who buys sale leasebacks, and I'll kind of loop veterinary into just the overall healthcare real estate world. There are investment firms who specifically buy medical, and they do this because whether it's for humans or for pets, healthcare real estate, or healthcare tenants, I should say, have a high degree of recession and internet resistance. At some point, telemedicine is great, but at some point, you or your pet are going to have to go see a doctor, and therefore they make healthcare companies make for very strong lease guarantors, very stable tenants. We don't see a lot of movement among healthcare tenants. Healthcare tenants move for usually two reasons. One, the main owner passes away or retires and doesn't have a succession plan. Or the other reason is they outgrow their space. Usually the two reasons. So again, there are investment firms who buy medical, and there are just mom and pop individual investors who again like the stability of healthcare as a product type, and that's who's looking for sale leasebacks, because they'll do their due diligence. They'll learn about who the practice is, who the vet who's that's standing behind this clinic is, and they'll see that a lot of them have 20, 30, 40 years experience and have built up really sizable practice. And again, it just everything goes back to that strength of tenant, and building on that security.
That makes tons of sense. So, Chuck, what does Greysteel do, and how do you fit into the sale leaseback world? What do you guys specialize in?
So Greysteel is a real estate investment services firm. We do investment sales, which is what myself and my partner Nate Cleland do, which is another way of saying we're real estate brokers, commercial real estate brokers. Greysteel also does debt placement and equity placement, but Nate and I, we focus on sales. So we spend a good deal of our time working and prospecting with vets. So Nate, my partner, he comes from a veterinary family, and about a year ago, we really started to concentrate on veterinary as a product type. And we quickly realized that a good deal of the vets own their properties as well. And so, again, we prospect, calling on vets, seeing who's out there interested in selling their property. And those sales fall into two categories. One is the vet who's already sold his or her practice, and they have a lease with a usually a corporate tenant. And so that's just a pretty straight commercial sale. If they're interested, we'll provide a valuation based on the lease terms. The terms of the lease is going to dictate the value of the real estate. And if If the motivation is there and the numbers work, we'll then look to bring it to market and list it. The other client we work with is the independent owner. So we work on the sale leaseback, and the sale leaseback. Since there isn't a lease, we help the vet kind of create a lease. We come up with proposed rental terms, and that's how we base the value, and that's what we offer to the market. And in addition to just the standard brokerage activities like that, just finding the vets looking to sell and then looking to list their property. We also provide a lot of and we try to be a resource to vets. We find that when it comes to commercial real estate, a lot of vets, there's a lack of knowledge with it. And so we try to be a resource to provide them information on not just, what does the overall veterinary real estate market look like, and what is the process for selling a property, but also giving them help in terms of lease negotiations. Some of these vets, when they are, if they're negotiating a sale of the practice to one of the corporate operators, they're dealing with real sophisticated legal teams, which is probably outside of their comfort zone. And we assume that they're also, they have their own attorneys, but it could be, beyond what the typical attorney sees on a daily basis. So because we speak with the operators, we also review a ton of leases from, all the, let's say, the top 40 different operators. And we try to, impart that knowledge and give them feedback as to, how best to go about either negotiating during the practice sale, or if it comes, or if they're trying to do a lease extension.
Really interesting stuff. And we ran out of time like we always do. I think the sales leaseback is a very interesting option for a lot of the people out there that are owning a business and a practice at the same time. Thanks for joining us. We've got a couple of quick questions that we like to ask every guest before we wrap up. First is a YouTube video, a TED Talk, something that you found inspiring along your path.
Yeah, so I recently read the book Extreme Ownership by Jocko Willink and Leif Babin. Not sure if you guys are familiar with Jocko's podcast, but he and Leif, they're former Navy SEALs. And upon leaving the Navy, they opened a management consulting business. And they also happen to be very good storytellers. And the book, talks about varying times when they were deployed in Iraq, leading troops, and equating those stories to something they might have come across in working with their corporate clients, in terms of leadership and overcoming challenges and, providing strategies for success. Yeah, it's a good read.
Awesome. I'm going to add it to my reading list because I haven't read that one. And the second question that we ask, is there another innovator or a company representation that you know in our industry that would be a good guest for this podcast?
Yeah, so I'll stick to real estate because it's what I know, and I'll recommend Brian Waterman of Keeper Bay Real Estate. Keeper Bay is an investment firm that focuses pretty much solely on veterinary real estate. And a lot of times when I speak with vets, they don't know that there's investment firms out there that all they do is look for veterinary real estate because they like that business, they understand that business. So I think Brian would be an interesting guest.
Thank you so much for listening to the Veterinary Innovation Podcast. If you want to hear about our new episodes, please follow us on any social media channel. Also, you can check out our website at veterinaryinnovationpodcast.com. See you next week.